Hello. 2020 has obviously been a very challenging period for investors globally. However, despite all the concerns around the world today, we believe the outlook for Asia ex-Japan looks increasingly attractive. It's the first major region to be coming out of the COVID crisis, with roughly 80% of the countries in our portfolio open and getting back to work. It is doing so in relatively good shape without having destroyed its balance sheet with stimulus like many Western economies. And valuations are attractive. We're near the lows of the global financial crisis in terms of price-to-book multiples, for example. And what have we been doing? Well, not too much. We've added a little bit to beat up quality cyclical companies, but as long-term investors, we believe our portfolio, with its focus on technology and innovation, is well placed for the changes that have been accelerated by the COVID pandemic, and really excited by the stronger growth we may see in some of the region's best companies. So let's talk a little bit more about the region and then our portfolio. Put simply, we see the world splitting between the countries which have been properly managed in this pandemic, predominantly in Asia, and those which have not, mostly in the West, i.e. Europe and possibly America. Across the latter group, we've seen prolonged lockdowns and enormous stimuluses, with trillions being spent and interest rates plunging back towards zero. In Asia, on the other hand, large parts of the region are now open or opening for business. Korea, Taiwan, and Hong Kong never really locked down like the West, while in China, in major cities like Shanghai, 80% of businesses are now open, and we're seeing leading indicators such as auto sales picking up into double digits. And more importantly, Asian countries have not been forced into any of the drastic stimuluses that we've seen in the West. So we have reasonably sensible interest rates and no ballooning balance sheets, putting many of the region's economies and currencies in a much stronger position over the coming years. And finally, Asia ex-Japan is likely to be one of the biggest beneficiaries of collapsing oil prices, with the majority of countries being net energy importers. So putting this all together, Asia is getting back to business faster than anyone else and is arguably in a far superior position compared to other developed regions. So what's been happening in our portfolios? Well, not a huge amount. We remain bullish on the region's underlying demographics, adoption of technology, and the rise of the Asian consumer, which is where our portfolios are positioned. Our biggest question is whether the current crisis accelerates trends that were already underway. For instance, one of our largest holdings, Sea International, an ASEAN e-commerce business, has been booming under lockdown, especially in Indonesia. So we believe gross merchandising sales could now well grow more than 100% this year to more than $30 billion, significantly higher than our original estimates. And more importantly, we see a permanently higher shift in the adoption of the online economy across Southeast Asia. Over in China, many of our technology companies have been expanding rapidly into new categories. JD.com, the online retailer, has seen orders for online groceries accelerate by 300 to 400%, and has had to add more than 20,000 employees to help with logistics. Actual trading in the portfolio has been pretty limited, albeit we did take advantage of some extreme price moves. For example, we purchased Longi Green Energy, China's largest maker of solar cells, and added to some quality cyclical companies like Nexteer, the auto component maker, which is well placed for an era of autonomous driving. By country, funding has come in part from India, but we do have some concerns. The country was already experiencing a lackluster economy before Corona, with significant issues in the financial sector, and it's therefore not coming to this crisis in good shape. And we broadened our portfolio out a little into parts of ASEAN. For example, Indonesia, where valuation looked extreme. But our biggest relative position remains Vietnam, which is likely to benefit from the reallocation of manufacturing away from China, a process likely to be accelerated by the current crisis. So to conclude, we are positive. We believe Asia is coming out of this crisis first, in far better financial shape than Western economies, with superior long-term growth prospects and cheaper valuations. And we believe our portfolio of growth companies focused on technology and innovation are extremely well placed in a post-COVID world. So for investors, we believe it is time to look east.